Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is Tuesday, February 21st, and we are coming at you after a long US holiday weekend. I think a lot of people, including myself to a degree, were expecting some bullishness from crypto, and we did to a degree. There were some crazy coins that pumped 50-60%, like Neo, and then Bitcoin, of course, did get above 25K on a few occasions, but was unable to hold that level. And then as we opened this morning, equities opened lower and headed lower, of course, still throughout the day. So some interesting, ways to begin the week. It's not completely abnormal to see, kind of a beginning of the week sell off after what was, more or less a bullish end to last week. So, no immediate concern. But the big news that we have this week is we have, as we mentioned last week, we have PCE this week on Friday. So PCE will print Friday at 8:30 in the morning Eastern Standard Time, and that will likely be the next kind of set of fireworks for the charts. I'm sure we'll have, a couple of volatile events this week, but this is definitely going to be one to look for. PCE is certainly one of the Fed's preferred inflation metrics. And of course, it's very much how inflation is relating to the consumer. Talked about this many times. Consumer drives the economy. So very important outlook for this. Of course, if it is a miss, we should move bearish. Miss would be, higher than expected inflation. A beat would be lower than expected inflation, and that would push us potentially higher. So we definitely want a beat. The big thing is, for month over month and year over year, there's very slight changes to the downside for in terms of expectations. I think it's point. Actually, we just sent out the TTC newsletter. I'll have to review exactly what the data is again, but I believe year over year is expected to come down by just 0.1% in terms of core, which is typically the preferred inflation metric. So very slight year over year decrease. It's obviously still heading in the lower direction if we get the number that is desired, but also sets us up for potentially having a look at on the other end. Inflation has been coming down for several months. Used car data is higher. Energy prices have been, very back and forth. And then, of course, unemployment is at all-time lows, and consumer spending picked up, I believe, a full percent last month compared to a year before. So a lot of mixed signals in terms of where inflation is, and I would expect it more or less. I think a 0.1% decrease is certainly in line, but I do think that there is an opportunity to either have, potentially flat inflation, which means, exact same as the previous month, or potentially slightly higher, which would be, potentially a 0.1 or 0.2% increase. So I definitely think that that's plausible, although I'm not ready to say that now. Fortunately, the past several times is Nick Tamiros from the Wall Street Journal or reporters from the Wall Street Journal have kind of telegraphed this to us, 24 to 48 hours prior. So, of course, we'll keep a lookout for that. We'll continue to research inflation data this week, but definitely, this is something to be aware of for the end of the week. And this could potentially have create a beautiful weekend for crypto or a very bad weekend for crypto. So back to DXY, we're still ranging, from the, between the lows and the recent highs. We are sitting in this range that we were trading in for pretty much predominantly the entire month of December. And we are above where we opened for January 1st. So January 1st was right down here. Remember, we had that spike, it pushed down, and then everything rose. We're now right around that level again. We are above the previous daily close, which if you watch a lot of my shows, this is a very key level, especially for slow-moving assets like this. So stay above the previous daily close and start to trickle higher towards that 105 level. Get below the previous daily close, you have this 200 estimated moving average, and break below that, then you're probably headed back down to near 101. 102. So see all these wicks right here. Definitely, this 103 level closely guarded, coincides with the 200 moving average a bit. We've seen some wicks down there. So I would not expect an immediate sell-off if we did start to break down that to that level just based on strength. And then, of course, we are above the previous daily close. So creeping back above up to 105 would certainly likely be bearish for risk assets. Of course, there has been some topsy-turviness in relation to the dollar, but piping up to 105 certainly not positive for risk as a whole. And I think to get to 105, you still have to break above that 104.6 level. So as long as DXY is ranging and not really shoving in one direction or the other, I do think that based on what we've seen throughout January and part of February, if DXY, if what's the easiest way to say this? If DXY continues to stay flat in this very tight range, that could still give risk some room to roam in a bullish direction, provided macro data supports that movement. So what I'm trying to say is, I think you have to see an extreme movement out of DXY in one direction or the other to end up factoring back on risk immediately. So if you saw a candle like this, I think that would negatively affect risk. If you saw a candle like this, that would negatively affect risk. If you saw a candle like this, that would probably positively affect risk. If you saw a candle like this, that would probably positively affect risk. If you see candles like these and like these, then there's probably not going to be an immediate impact on risk markets, at least for the moment. So something to consider as we move forward. Looking at equities, we are at a very critical level. This 40-10 level, very important as it coincides with the top of resistance and the range in which we traded in throughout November and portions of early January. Of course, a lot of deviation above and below, but this is a very core trading area that we spent a long amount of time in. So I'm looking at this as kind of top of range support. And so if we break back into this, then you're probably, chopping it up all the way down to 39.30. So staying above this level, very important for potential bullish continuation. So stay above 40.10, move back higher towards the previous daily close for potential rejection or acceptance. If you accept into below 40.10, potentially you get a swing failure pattern, all the way, as long as you stay above 4K. And then if you stay below 4K, then you're probably just dripping into this channel, hoping for 39.30 to hold. So I have a feeling that this channel right here is going to be very critical for the future of equities price action. Below the channel, probably bearish or, very long-term kind of swing failure pattern style trading here. This took basically 3-4 weeks to bust out of. And if you are stuck in this channel, then this obviously becomes resistance and you have, that much more struggle to break back out. So moral of the story is stay above 40.10. Bullish trajectory still back on track. Of course, RSI is fully reset and it has very much respected, the RSI trends lately. So stay above this, good. Below that, bad. If you do stay above this previous daily close, for now, 40.60 is resistance. I wouldn't really factor that in now, considering the daily is going to close in probably one or two more. It's actually going to close in one more. It's going to close in two more 4-hour candles. So I think that would be pretty tough to really target that as a next move. So, but for now, these levels, anywhere between 40.40 and 40.60 is going to be resistance, judging by these wicks right here. And of course, you have to get above the estimated 200 moving average, which is directly at 40.40. So 40.40 to 40.60 would be a great range to get back into before the daily close. And if we stay below the 40.60 level, maybe we're ranging around a little bit in this area before a break higher, above these wicks, or a break lower back into this range. So of course, oversold RSI, PCE Friday. We do have some other intermittent data this week to be aware of if you are, thinking that you want to buy here. We of course have FOMC minutes tomorrow, which will, come, towards the end of the day. So less important for the trading session from now towards, end of day tomorrow. But this will give us, insight into how the Fed is thinking. And of course, we have GDP revision number. So basically inflation adjusted GDP, the number was 2.9%. You want to see it stay, very close to that number or higher. That could potentially bring some fireworks. And then of course we have PCE. So basically equity is at a very critical level. Break below, it gets a lot higher. It gets a lot tougher to continue bullish trajectory, stay above bullish trajectory, potentially still intact. Looking at Bitcoin, obviously, if you break below this, ascending triangle trend, probably headed back down to at least 24, potentially 23.3. Stay above it, you're still, potentially have 25K or higher in the sights. And then if you hold this and get up to, 24.925 and get rejected, then you're probably going to, maybe form another wick below this or end up breaking through. So I'll get rid of these lines because I think, this is probably the most simple trading pattern known to man. If you've been in the market for a while, you should very much know this pattern. It's called an ascending triangle, flat top, very obvious and simple trend moving higher. As long as price stays above the trend, it has a potential bullish trajectory. And as long as price is below the resistance level, which in this case, all the way up to 25.2, but 25K solid, number of resistances. If it's below that, then it's still, fighting that battle between bull and bear. So the break you look for, in bearish is, confirmed break of this trend. So, just wicks here. So you would want something, maybe a wick down, body candle up, gets rejected underneath the trend and then comes back lower. And then to break higher, you probably want, above 25K, long the retap of what is now support, and then take that higher. So this is a very tricky trading pattern. As you can see, 3 separate wicks from breaking the trend that probably trapped a lot of shorts both times. We technically do have a little bit of bullish divergence here, uptrend, downtrend, and then of course, resistance is 25K. So very simple pattern: break, back lower, break. I'm sorry, what's the easiest way to say this? So break, head up, back lower, rejected, then go lower, moves higher, back to the support, and then does that. So that's pretty much your real 2 options for trading this exact scenario. It's either going to break higher or it's going to break the trend and probably head back towards the recent low, or potentially support around that 24K flat area. So, Bitcoin, not too challenging. But if we zoom out just a little bit, back again to what we were discussing prior to last week, if we start breaking, I think 22K is going to be a very critical level, depending on how this plays out, just due to the estimated 200 moving average. And since we've broken above that, obviously multi-day support there mid-February before moving higher. So that if we did, if we were to just rocket down from here, 22K would be pretty much that level where the estimated 200 moving average is next. And then if we were to break through that, we of course have this range that we traded in underneath 22K between 21.3 and 20.4, which I think is going to be very critical if we end up making it down there as well. So obviously, maybe getting a bit ahead of myself in that outlook, but good to understand in case, bad things do happen. But moral of the story is ascending triangle good. We need to confirm above 25 to move higher. And of course, if we do move above 25, in relation to what we discussed last week, is we still have this fair value gap between 25K and mid 28K. So something to look out for there if 25K is broken. Looking at ETH, you're going to see very similar outlook to Bitcoin. The technicals look a little bit more clean just in relation to support and resistance and the trend lines that I've drawn. You don't really have that beautiful ascending triangle pattern. I guess, if you are looking for that in terms of Bitcoin, it did get cut there for Ethereum. So something to make note of if you are a Bitcoin bull. We are sitting just above supports at 1650, which was support, when we spoke on Friday last week. It's still holding up. 2 wicks here. RSI, no bullish divergence on the RSI. Sorry, I couldn't get that out of my mouth. And no reset on RSI either. So all we have are 2, decent looking wicks and a 4-hour that has yet to close and still has 2 hours left. And we are trying to, make sure that we stay above the previous wicks of which we traded in early February. So Moral of the story for Ethereum is, break below 1650, you're probably headed back towards 1600. Hold this level, reattack the previous daily high, which was 1700. Really need to break, 1700 is the number, is to Ethereum as 25K is to Bitcoin. So break above 17K, flip that into support. You've got room to move higher towards 1780 or higher. If you can hold this, but then you get rejected, near the VWAP or the previous daily close at 1600, then you're probably back down to 1650 or revisiting the same scenario as if 1650 breaks, tagging 1600. So if you are, placing longs and making bullish bets, this is not the worst place to do it. I will be 100% honest. I do think that you're really going to need equities to strongly push off of this kind of 40-10 level. But you're already seeing Bitcoin, if we zoom into the 1 hour, you're already seeing Bitcoin make a really strong push back into this range, but underneath the VWAP. So now that we're zooming into lower time frame, if we're looking at higher time frame, what I would want to see is Bitcoin reclaiming the VWAP. It's been underneath the VWAP since midnights of, or since, very early AM, US time. And has been rejected multiple times underneath it. So if you can get back above the VWAP, that's a pretty good sign for potentially, trying to reclaim recent highs, which is 25 or 25.1. Stay underneath the VWAP, then you're potentially revisiting the scenario of, dripping rejection and then moving lower. So I think that's kind of your next signal. And then, of course, you still have this previous daily close at 24.8. So, another significant level. We've talked about this type of trading many times. When you reclaim, nice swing failure pattern, you move higher. We had a good drive, good volume. This is typically what you would look for in a long signal. Just kind of repeating this over multiple times is, good drive, nice wick, strong bull candle. Good drive, nice wick, strong bull candle, followed by bull candles. Good drive, decent wick there, but good drive up, capture the previous candle. And now we're moving higher. Basically what you'd want to see out of these next few hourlies is, volume close to what this candle was, else, the volume or the momentum could be waning. Because when you're looking for this kind of, knife catch, if you will, your signal was, strong wick, close above the trend, strong wick, close above the trend. And then you also have, a strong, buy volume coming in heavier than previous sell volume. So buy volume coming in heavier than previous sell volume, buy volume coming in heavier than previous sell volume, buy volume coming in not exactly heavier than previous sell volume, but price overtook nearly both of these two candles on, close to equal buy volume. So not the best signal for a third, knife catch, but we're now above the VWAP, volumes rising. So now you would look to reclaim the previous daily close. And then you can start to talk about getting above 25K. So preliminarily, nice bounces out of Bitcoin. We've had 3 kind of quote unquote V drops since Thursday, one on Thursday, one on Sunday or kind of, Saturday evening into Sunday. And then of course, one this morning. So the bulls are definitely still trying to play. We've had 1, 2, 3, 4, 5 different taps at this level. Typically after 3, you'll start to see a sell-off, maybe 4. Seeing this many taps is certainly a positive sign for continuation. But, on the other hand, there's only so many tries at resistance that it will make before it ends up, failing or accepting. So I think we're nearing the end of figuring out whether 25K is going to break or hold. And I think the kind of the signal lies within equities. I think you're gonna wait to see Bitcoin reattempt or try to break that level until equities can maybe close this candle, which will close in an hour, and then try and see if you can kind of recreate that knife catch system on Bitcoin, on equities, where if we can bust up, engulf this candle, have a strong buy candle come in, or buy volume candle come in, then we'll kind of have a knife catch confirmation, very similar to what we saw here. Actually, these are fantastic knife catch candles. Sell off, flat open, engulf, big buy volume. Sell off, engulf, big volume. Sell off, engulf, big buy volume. sell off, engulf, big buy volume. So, you can see these patterns: sell off, engulf, big buy volume. So if we see that again, pretty decent knife catch indicator there. It works on crypto as well. It'll work on lower time frames as well as higher time frames. So that'll be something that we look out for a potential knife catch. But again, got to get above this VWAP. Just breaking above it for several minutes is not exactly what you want to see. So very mixed trading right now. I currently do not have any trades open. I closed mine out yesterday after we failed to break above 25K again. I'm not buying into fully the narrative that will break. I would prefer, also, if we do break, who's to say we don't just zoom up and then have a kind of a quick sell-off candle, considering the resistance and also the amount of people that are bullish at this level. So you also have to look at things like if your whole Twitter feed's kind of bullish and we're still, more or less in a bear market and there's a lot of confusion over inflation and unemployment and Federal Reserve action, I can't see prices sustaining, 200-300% that quickly. Of course we did it in 2019, but it's a bit different of an environment, and we're really struggling at this level. So I don't want to say that it's not going to happen, but I have certainly become a lot more cautious than optimistic as I was to start the weekend. So that could certainly change, and I would love to see a flip of 25. Maybe we jump to 26, maybe we sell off back to 25 and then we long 25, 28. That would be very beautiful. Or if I miss the quick move, I won't be too pained, because I think you'll probably get a pretty good short up here if that were to be the case. So, and then on the other hand, maybe PCE comes in positive and the bulls are really out to play and everybody's kind of thesis was confirmed. Then maybe buying in for the next couple of months into Q2 in June isn't the worst idea. So if you're placing bullish bets here, at the end of the day, what I'm trying to say, it's not the worst idea in the world. But I do think that if you're placing a lot of bullish bets at resistance and you had no bullish bets lower, you're probably doing it wrong, because you're basically entering the market at highs with a lot of macro darkness kind of creeping in. But if you bought, let's say in mid-January or very early February, and you're kind of still sitting on those buys, or even mid-February, which were fantastic buys, then, at that point, maybe you're just saying, I'll wait a little bit. I'll wait to see what happens at 25. If we end up, going back to 24, I'll take a couple percentage points off my gains and I'll close it out for an overall win. So that's kind of my outlook. If you're flat already, probably safer to stay flat. If you're in the market from lower, I think you can still reasonably take a risk, but definitely be aware that that risk, the opportunity is certainly waning. So good luck, happy trading. We'll of course chat tomorrow before the GDP numbers come out. And moral of the story is, let's hope equities hold 40.10. If not, we'll probably start a slow grind towards 39.30, which would probably drag Bitcoin. I'm going to guess, more or less back near this estimated 200 moving average. So good luck, happy trading. Speak to everybody tomorrow.